Hi guys, welcome to my channel. Today we are going to navigate the risk management to consider if you want to be a good trader. I think is best way. You need to manage how to use leverage when trading futures. People want to make money quick. They end up losing their they trade like 5 trades, making profit in the 5 trade and lose it at a trade because they don't manage to take profit or to step loss or to know how to set the leverage you are using in trade. For example, now this trade I'm into now, just one of my accounts. You can see I've made like 65%, like $4.1, and my margin USD is just 4.7.44. Let me just show you since when I have opened the trade. I've opened the trade since this is the time I opened the trade. That's on 3, and today I think today is 6. Today is 6. And since then I've been sleeping, waking up without being liquidated. You can see my stop loss is 1,575. You can see my stop loss, and my risk is 0. Let's say 0.2 now. You can see I use cross 20 leverage. You see there's a lot of leverage here in AHCH. Imagine if I use 100 leverage. If I use 100 leverage, I may get liquidated when sleeping. Because at times, sometimes I get liquidated when sleeping. Then when I don't know how to manage my risk and know how to set stop loss, most time I get liquidated when I start the trade. It was when I sleep. Because if I'm watching the trade time to time, I won't get liquidated. I like to take I like to wait till I see my money going down in my Binance account when I first start to trade. But now, since I know how to manage the risk management, I have no problem with any risk management. Imagine you enter this trade with $100 or $1,000. I've made a lot. I have made 61% of. I've made almost maybe like almost $600 profit. Now, time to time, you see this ROE. I've entered 92% today. 92%. That's around 6.89 for the gain. I take profit and I still leave some, still going and still making my profit because I have understand how to manage my risk management thoroughly. Not that I'm perfect. You win if you are a trader. If you don't like loss, I think that I may decide to enter 10 trade in a week. At least my return of investment within the 10 trade should be at least 9 or 8.5. I may lose 2 trade. I'm not losing to get liquidated. I may just lose it to maybe just enter my stop loss. That's all. Cause the risk management, we need to know more about it as a good trader. From my own opinion, from everybody's opinion, risk management is very useful. You need to know how to manage your risk. You need to know everything about to manage your risk. Let's just check the small book. You say risk management. In order to be a good trader, you have to be a good risk manager. One bad trader can eat up the profit made from 5 good traders. If you don't manage your risk properly, we have so many good traders, but bad risk management. Yes, we have so many good traders. Like me, I was a good trader, but my profit won't be enough for me sometimes. Maybe the signal I was give have trigger the third TP. I just let me wait till the 5 TP till I get liquidated on the trade. Then let's continue. Risk management will save you when when your strategies fail. Yes, that's all about risk management. Risk management will surely save you when your strategies fail you. In this book, I will be showing you guys a risk management plan that will help you in the journey of being a profitable trader on the long run. Phase 2, how to become a risk manager. Phase 1, always have a trading plan and stick to it all the time. You can check my trade. I've already stick to it. I've already see, maybe on the first day I enter this trade, I've already see like minus 5.57, like 72%. I have my ROE is minus 72%. Because I've stick to it. Once you enter my stop loss, you will surely trigger. And I know, because I already work the market very well, and it is very understand to me that once e enter my stop loss, I'm going out of the trade. I would look my chart well, go back to that trade without hesitating. Let's go on. Always use stop loss. Stop loss is very important because you can only trade when you have capital. That's what I'm saying. You can only trade when you have capital. You can only trade, so you will know how to lose some. When setting your stop loss, imagine you using $100 to trade and you lose at least $50. When triggering stop loss, you need to know how to set stop loss too. Your stop loss must not be more than maybe 20 or 10% of your capital. 20 or 10%. 20 or 10% is too large. You know how to set your stop loss. That's why so many people prefer keeping their money on spot more than future trade. Because future trade will just run your good day. One coin will just run your good day. Let's go on. If you eventually get into a loss streak, take a week off trading, go back to work on your strategy, figure it out on what's going on. That's what I tell you. Once my stop loss is triggered, I go back to my chart. I will leave trading for that day, maybe for 2 or 3 days. Go back to my chart, look what is happening all day, and I check it again. I review my strategy, ask for people, because I have some people who will share opinion too. Just ask them, can I look at your chart? We send chart, we exchange, we interact. Another one, having a trading journal so you can keep the track of your trade to know if you are progressing or not. Yes, you need to check that you are making you have to have a trading journal. The coin you enter today, the profit you make. Just list it. Like I say already the other time, that once I enter a 10 trade, it may be good for me. I may hit stop loss twice inside the 10 trades or once. And if it is this week I enter a trade and have the coin I trade trigger at least maybe 3 to 4 stop loss, I will have known that's a bad week for me. I will reschedule, change my strategy, or build up another strategy that will be very effective for me. Let's go into it again. Capital preservation is golden. Phase 2, know how much is in your portfolio. You just need to know how much in your portfolio. Like me, I have in this account that I'm using just to test one of my tricks. You can see I'm still making the fucking profit Open a position with nothing less than 10% of your entire portfolio, so you won't be at lost. That's what I'm saying. Use your calculator and know how much is your 20 to 30% of trading margin. 20% of $1 is 20 cents. 30% of $1 is 30 cents. Set a limit and the amount you want to use for the trade, $1, and your leverage. You must know how to set your leverage. Leverage keys. Imagine if I have set this coin into like 100 leverage, I will have trigger my stop loss sinks and I may get liquidated sure, because I just know how to manage the leverage, manage my stop loss, and boom, I'm good on this trade. This is my third trade. This is my third time. If I take this profit, that will be my third time on this single trade taking profit. Let's go on. When setting the stop loss, check the estimate loss you incur if the loss should hit. You see, when setting up the stop loss, you just know maybe you have already have at least like maybe $1,000 as a profit in your trading. It's not so bad losing $10 when you trigger your stop loss maybe once or twice. It's not bad, because you can't be a good trader without making loss. Loss is born for us. You won't be out of it. You just need to know that. Not like you have gained like $1,000 in your trade and you lose $500 when your stop loss trigger. No. That's a bad strategy. At least you lose maybe like 2, 3 or 5%. Maybe you lose when making $100 profit. Maybe you go into another trade and you hit another $5. Maybe you have maybe 5% or 0.5%. Or you must know how to trigger your stop loss. You know how to manage that risk properly. You can be a good trader and be a just bad planner. Let's go on. Let's estimate loss should not be than 30 cents. If it's more, either reduce the amount you are open the trade position size margin with adjust and your leverage fee estimate loss of 30 cents at most. If you follow this risk management, you will understand that a one good trader can give you the loss of a 4 bad trader. Yes, I'm already telling you, if you manage that fucking risk, a one good trader can give you the loss of a 4 bad trader. Check at the beginning. The beginning we say one bad trade can eat up the profit made from 5 good trades. So now, one good trader can give you the loss of a 4 bad trade. Let's say you hit stop loss of 20 cents 4 times. Meanwhile, you lost 80 cents, right? Then the 5th trader actually gave you 100 return of investment. That is $1. If you subtract 30 cents from $1, you still have 20 cents profit in your portfolio. I urge you guys to understand and use this. It is good. It is for your own good. It is for my own good. Thank you. If you are watching this video for the first time, don't forget to subscribe to my YouTube channel. Hit the like button, because I'm going to drop another episode of trading strategy, and we are about to leave our YouTube and Telegram group. We're sending signal. It's legit. So also know how to manage your risk. No, this is not a financial advice, but you just need to manage the risk when trading to become a good trader. You may be a good trader and have a bad risk management. Thank you.